Hello everyone, welcome back to our channel. But if you're new to this channel, please click that subscribe button and your like button so you can help this channel to grow. In this video, let us talk about JFrog, which is being listed in Nasdaq on September 16, 2020, not being outdone by Snowflake, as it also debuted on a higher note with an opening price of $71.27 on the open market, though subsequently it closed at $64.69 or 47.25% from its IPO price of $44. Is Frog stocks a buy? Are you going to jump on this one, wait, or just run away from being burned? As they said, release fast or die. JFrog is the developer of liquid software which enables companies to quickly move from development to production of their respective apps or operating systems. It empowers their customers to continuously update their software, particularly on this generation which is in digital transformation, to implement new features without worrying breakdowns, security, and repercussions of frequent upgrades, therefore assuring its users satisfaction. Frog has 139% net dollar retention rate and having a tremendous market share with 5,800 customers, in which 75% is from 500 Fortune companies, 286 customers with 100,000 plus ARR, while serving millions of developers across 90 countries. Accordingly, Netflix, Facebook, Google, Dell, Slack, and Spotify are one of their famous customers who needs a continuous upgrading on their apps and operating systems. This makes JFrog as ideal vendor for DevOps services. Meanwhile, Frog's fundamentals are relatively strong as well, having a 50% year-over-year revenue growth when it generated a revenue of $69.3 million for the first 6 months ended June 30, 2020, compared to 2019's of the same period of $46.1 million. While the most important benchmark, the gross profit margin, JFrog has a sky high at 81%, which means that they have enough gross profit to accommodate their operating expenses as well as an eventual residual for their stockholders. While the research and development is being maintained at 28% of total revenue, which is good sign that the company is continuously upholding on technological advancement, particularly on the technology sector. They also have done excellently in reducing its sales and marketing and general and administrative expenses, in which in the first 6 months of 2020, it has 40% compared to 43% in 2019, while G&A is from 17% down to 14% in the 6 months ended June 30, 2020. In addition, it had improved its net loss to $761,000 in the first 6 months ended June 30, 2020, compared to last year's first 6 months ended June 2019 at $3.1 million. It could mean to us that this year it could have a net loss around $1.2 million to $1.4 million. Therefore, this progress would impliedly tell us that JFrog could be profitable in the near term, which would increase their share price, therefore creating shareholders' value. Furthermore, it has current ratio of 2.28, which means that the company has enough money to pay its short-term liabilities, having current assets of $208 million over its current liabilities of $91.3 million. Meanwhile, total assets over total liabilities is 2.49, which means that the company is solvent, because it has at least $2 of assets every debt that it owes, with total assets of $247,900,000 against total liabilities of $99.5 million. While debt-to-equity ratio will be improved significantly after this offering at 0.67, since total stockholders' equity will become $148,383,000. Unlike to other growth companies, JFrog has positive cash flow in 5 years. In fact, in 6 months ended June 30, 2020, it has an operating cash flow of $5.9 million while having a free cash flow of $4.4 million. It means to us that they have enough money to continue in going concern with more working capital to further expand its operation or acquire other business of the same field, which will further increase its market opportunity. Speaking of market opportunity, the digital transformation that we have today gives JFrog a competitive advantage, as they built the world's first universal package repository called JFrog Artifactory. This is to fundamentally transform the way that software release cycle is managed, since they have an end-to-end hybrid universal DevOps platform to achieve continuous software release management, or CSRM, which, according to their filing, they had an estimated market opportunity to be around $22 billion. Imagine just having a 10% or 5% of that market opportunity. It would mean that this company in 2024 will be a multi-billion-dollar company, and you had invested to it, then it would mean that its share price could give you a wealth at the long run. With that being said, is Frog stocks a buy or just ignore it? At current price of $64.46 as of the latest closing September 17, 2020, this stock is expensive to hold, with price to sales ratio of $44.95 in a market cap of $5.72 billion. However, in consideration with its growth rate and as a pioneering to liquid software, my opinion to this stock is a buy now, due to its strong fundamentals and high growth potential, because the future needs for continuous DevOps or software updates. This stock has a strong upside potential, while exposure to downward risk is minimal, as it may not be affected heavily by insiders trading. Noting that Frog's initial public offering of 11,568,218 shares already includes the ordinary shares of selling shareholders for 3,568,218 shares. In this light, jumping now to Frogs 1, starting a small position at the price below $70 could be a good idea, then add more shares to average down in case this stock would consolidate to lower base. Even a lower position of this stock could give a fortune to us someday. Just hold it long term for at least 4 to 5 years. Give JFrog the time to grow. Get that 5% or 10% market share of the $22 billion market opportunity. It could give you wealth, as I said earlier. That's all for today, guys. So if you like this video and you find it helpful, please click that subscribe button and your like button. Also, don't forget your notification bell so you'll keep updated on my upcoming videos. Please note that I'm dropping a video once or twice a week.